We're back here in WJR. This is Real Estate 411. Having a good time. We're on the halfway point through our show now. The number to dial is 877-ANNETTE, and the website is realestate411now.com, and this is real estate information at its finest, and we have a good time doing it too. And we're about to fire off the mic to Beth Shensky from EA Shensky, and she's going to educate us on our tax time.
Yeah, nobody likes tax time really, but it's one of those things we have to do. And so the goal is to keep more money in your back pocket, and a good way to do that is to use a tax credit, which you will remember reduces the actual tax you have to hand over to Uncle Sam. So let's take a look at a few credits that you may be aware of, but you may not have. Don't forget any of them. One is for if you have investments where you pay taxes on foreign investments, that tax can be a direct credit depending upon your income. Everyone is aware of the child and dependent care credits. Child care is so expensive to let parents both work. And often an employer will offer a plan to allow before the tax deduction or before taxable income deduction of the child care costs, but the taxpayer needs to remember that they need to file the child and dependent care form to tell Uncle Sam who you paid and square up with them. Otherwise, you end up paying tax on the money that was withheld before tax. There's a child tax credit up to $1,000 for any young person under the age of 17, but there are income limitations there. The big one is education credits. The American Opportunity Credit is the $2,500 credit that you get to use for 4 years. It doesn't have to be the first 4 years of your undergraduate degree, but it can only be used 4 times. And you need to really clearly understand that 60% of that is a direct reduction of income tax liability, and only 40% of that is actually refundable. Now, what I see a lot is kids want to claim themselves because they're big and they've got a job and they earned $5,000 and they want to take the credit because they're being big. Well, the reality is they don't owe enough tax to get the larger portion of the credit. So the credit is supposed to follow the personal exemption, which means if parents are taking the child as a deduction, as an exemption on their return, the credit goes to the parent, and then the parent can turn the dollars over to the kid. Once you've used this credit 4 times, you also get to use the lifetime learning credit, which is 20% of tuition and fees. That can go forever. Graduate study, a second bachelor's degree, whatever, but it's 20% of tuition and fees. And again, it's dollar for dollar reducing the tax that you owe to Uncle Sam. The government has drastically reduced the home residential energy credits, tax credits, but there still are small credits out there. So if you need a new furnace, if you need windows or a new door, do it, because you may be able to get some direct dollar for dollar reduction of your tax liability. There's a retirement savings credit for those people who are putting away money into a retirement account but don't have a lot of income. For the smaller employer providing health insurance coverage to their employees, there is a credit there. It's complicated. Going forward, you're going to have to purchase your health insurance through one of the exchanges in order to be eligible for the credit, but it can bring a significant tax reduction for an employer who provides health insurance to their employees. Obviously, and not obviously, but you got to know that owners and their relatives are not included in that calculation. So if it's just yourself and your kid, or yourself and your spouse, it goes away. There's a credit for new employer-sponsored retirement accounts. There's the adoption credit, which is huge for those folks who are adopting a child, and for those folks who don't have high income, there's the they're working. There's an earned income credit that actually is scalable to 3 children, and it increases up to a earning level of between $13,000 and $20,000, and then it winds back down, so that it's one of the few times that the government got it right, in my opinion, where they help a person while they're kind of getting going, and then as they get established and they're earning more money, they gradually withdraw it back. So often they just take everything away right as soon as you earn $1. So this one works. A lot of fraud there. If you're applying for it, expect your tax refund to come back more slowly, but go for it if it applies to you, because it's big dollars.
Beth, thank you so much, Beth. That was very informative. The number to dial for Beth Shensky is 248-544 6160, and it's eashensky.com.
Yeah, if you haven't gotten your taxes filed or you don't know who's going to be doing them, this is a relationship that is so critical to have year after year after year. And E.A. Shensky's been with us. This is their second season with us. We love having Beth on the show, as well as Ron, her husband, and they do such a great job for all of our radio listeners. So Beth, give us deadlines here. If they call you up, tomorrow wanting to get their tax returns filed, what type of time frame are we looking before your next available appointment?
Oh, it's my favorite answer. It depends. It depends totally on your tax return. If you walk in with all of your paperwork, we have people that you can sit down with, and
you're at the head of the class.
Well, you probably won't sit down with me unless you've got a business, but we've got folks that you can sit down with, and if you have everything put together, we'll get you out within a couple of days.
Wow.
And then once we electronically file, which we give away free to anybody who processes through our office, we're finding that refunds are back. Probably the quickest we're seeing them is 10 days. They can take up to 3 weeks to come back. They've slowed down the process. IRS has. They're very concerned about identity theft. They're making. There's a lot of it going on. We've had 3 cases in our office in the last 2 years. So earned income credits and tax returns the refunds are just processing more slowly.
Besides the overwhelming knowledge that you carry, what is the incentive that radio show listeners have who tune into Real Estate 411 have the opportunity to receive when contacting you?
Oh, yeah, that's right. I don't think we've talked about that this year, but any Real Estate 411 listener who is a new client to our office gets a $100 credit against their tax preparation.
Sweet.
Fantastic.
Love it. Love
Works.
it. Love it.
Can you repeat that
Helps.
for our listeners, please?
Oh, for our listeners who would like to have their taxes done for the first time at E.A. Shinsky, we will give them a $100 credit against whatever their tax bill is.
Fantastic. You've heard it. Thank you very much, Beth.